Good morning, everyone. So this is the Fintech panel. So if you're here for top women in finance, please, this is the other conference, other conference on the other side of the wall. But this is the Fintech. So we're about to start. So please take your seats. I am Natalia Jones. I am Vice President of Programs at the Atlanta Society of Finance and Investment Professionals. And I just want to tell you that we're in for a treat this morning. This breakout session covers fintech, and we have experts in this field right here with us. So here we have Kellie Goodwin. She's a Senior Vice President, Head of Enterprise Payment Strategy, Santander Bank. We've got Esther Pigg, who is a Senior Vice President, Product Strategy, FIS Payments. And we also have Ellen Kobler, who is a Consumer Lending, Product and Portfolio Executive Vice President at SunTrust Bank. So I'm going to give the ladies a couple of minutes each to kind of tell us a little bit about their background and how they ended up working in this area of fintech. So Let's start with you, Kellie.
All right, can everyone hear me okay? Great, good morning. So I'm really excited to be here. I've actually known these ladies for a long time, and so I'm really happy to reunite with them. I've been in the payments industry almost 2 decades. Most recently, I'm now SVP of the Enterprise Payment Strategy for Santander Bank. I've been there 2 months. Before that, I spent a year and a half running the Innovation Center for Visa in San Francisco. So very different environments from that perspective. And prior to that, I spent 3 years at SunTrust Bank, where I met Ellen, and also led their Enterprise Payments Council for payments there. And then before that, 13 years at TSYS. Anyone know TSYS? There you go, in Columbus, Georgia, 13 years. So I've been in this space from a fintech provider perspective. I've also been in this space working at a bank and a network. So I've actually seen quite an evolution of the fintech space. I started working with fintechs before they were called fintech, when I was a fintech. So 2 decades ago, we used to get these, you're probably familiar with these, I used to get these books from like Goodwin and others, these little spiral-bound notebooks, and it would say payment processors, and our names were on that, right? Esther and ours, FIS was on there, TSYS was on there. And then it started, and then there are these other people that are in the environment. So the fintechs are really submerged around the payments ecosystem and the financial services industry ecosystem. Today, there's probably 1,400 fintech providers around the globe. Back in the early 2000s, there were maybe 40 that mattered. So I've seen quite an evolution of those providers.
Thanks, Kellie. Can everyone hear me? I think so. Good. How many of you have ever heard of FIS?
Oh, good.
Oh, gosh, thank you. I sometimes think we're one of the best kept secrets, even though we're the largest fintech provider in the U.S. It's been an exciting ride to be part of FIS. I've been with the company going on cumulatively 7 years, and I'm looking forward to sharing a little bit about how we view the market, what we see evolving in the fintech space, what we do with smaller growth fintechs, how we view that. Being kind of the larger provider, what does that mean for us to work with some of the other up-and-coming fintechs that Kellie referenced? So look forward to that. But a little bit about my background. Like Kellie, like Ellen, we've been fortunate to work in a lot of different areas. I actually started my career in banking with Bank One. Management training program back in the day. So I went through that whole program, came out the other end as it was becoming Chase, actually went into private banking for a few years before moving over into commercial lending. Then had the opportunity moved and had the opportunity to go to work for what was Nations Bank, and went into treasury management at that point. So I have touched a lot of banking background, so I have that side of the table to kind of draw upon and thinking about kind of the future of finance. But then I moved to Atlanta and had the opportunity to go to work for a fintech, as kind of described, check-free here locally in the Atlanta market, which was very exciting, the first online bill payment company to be launched. So working for check-free for a number of years, Went through the acquisition of, when Fiserv acquired CheckFree, was there for about a year, and then was recruited to join FIS. And it's been great to be a part of that. I focus primarily in the product management and product strategy areas, have responsibility most recently for all of our payments product strategy, which means we're looking out to the future. What are these crazy trends that are happening in our industry? How is that going to impact our clients, and what solutions do we need to bring to market in order to help our clients be successful? So that's part of what we do. Most recently now, we are kind of moving our banking group in, and I'll be forming a banking strategy team to work in collaboration with the payment strategy. So I think that'll give us a very holistic approach to the market. Thank you.
Super.
Ellen?
Well, good morning. My name's Ellen Kobler. I'm over Consumer Solutions for SunTrust, and what that means is that I'm over all of the products that we use in the deposit, checking, and lending space. You know, a little bit about SunTrust and why and how we are related to fintechs, and then maybe a bit about myself. So, for those of you who are not familiar with SunTrust, it's a bank, about $200 billion in assets. It's primarily located on the East Coast. The purpose for SunTrust is lighting the way to financial well-being. And SunTrust has two kind of large sections. We have a wholesale section, which covers our corporate clients. We have a consumer section, which covers all of our banking clients and includes branches and private wealth mortgage. As far as our vision, our advantage on the consumer side, our goal is really to help clients be able to meet their unique needs so they can enjoy the moments in life that matter. The way this manifests in the product groups where we work is we think about banking, borrowing, and payment solutions from the client's perspective. Time is one of the most valuable things we have. So we work really hard to make sure that clients can transact when and where they want with little friction, so as little friction as possible, going back to that whole concept of time. And so as we go forward today talking about the relationships we have with the fintechs, that's one of the main things fintechs are doing. They reduce friction. They allow for ease of transaction, and that's why it's such an important part of our ecosystem and a majorly important part of the future. So as we talk about myself for a minute, I like to say, some people go up a ladder. I have been all over the jungle gym. I have crossed the playground. So most recently, I was the Chief Risk Officer of E-Trade, which for those of you who are not familiar is online. It's an online trading platform. And the reality is it may have been one of the first private wealth and trading fintechs that was out there. But from the beginning of my career, I actually started my career as a chemical engineer for Shell Oil for several years. After business school, I was in private equity for a bit. I then did structured credit trading at Bank One in Chicago, prior to the JP Morgan merger. I moved to SunTrust after that and was investment banking in SunTrust. And during the downturn, like many people, I moved into a different area, which was risk. And in risk, I ran all of SunTrust quantitative modeling, the allowance for loan and lease losses, the CCAR process, which is the stress test that a lot of banks have to go through annually, as well as having the role of Chief Market Risk Officer. So lots of different experiences. But I think that they all lead towards figuring out how we think about the future and work together.
Great. Thank you so much, ladies. So let's start by just discussing what fintech is. You know, it's become a little bit of a buzzword, but everybody, I guess, understands it differently. So let's talk about what it is and how is it affecting different parts of finance industry. So who would like to start?
I'm happy to talk about it, and I'll just take a lending perspective because we each have different views. So I like the fact you said buzzword. I mean, the definition is a technology that enables financial transactions and capabilities. That's what fintech means. The reality is, I know in SunTrust, we think about it as a term for innovation, and going back to the way I mentioned earlier, this whole idea of ease of transaction, reduction of friction. When we think about the lending space, I bucket the fintech companies kind of into three buckets. There's one, which we've talked about repeatedly already. These are the technology firms that enable the transactions to go on where a bank or another provider actually pays for the service, and the service from the fintech is white labeled. So you don't know when I am doing, a client is transacting with SunTrust, you don't realize necessarily it's not that we're with TSYS or that we're with FIS or that we're with one of the other large fintech providers, but that is a very large and kind of the first group of fintech capabilities. The second way I think about fintech, and one of the terms that comes up, people talk about in the lending space, the disruptors. And to me, these are SoFi and some of the other online lenders that are actually funded through the capital markets or through private equity. They're not aligned with a bank institution. So I think of those as a separate group of lenders. Then there are the fintech providers that are actually partnering with the banks, and they take really two, or on the lending side, financial providers, they take two forms. There are the aggregators in the space. You've heard of them. It's Credit Karma, it's LendingTree. These are fintech platforms that then provide referrals to the bank groups to provide loans. The others are often actual physical groups that have great technology and then offer a loan in a point of sale concept like a Green Sky, and we can talk about that concept a little bit more later. But that's really the way I see the lending side of fintech breaking down.
Esther, what does it mean for you?
Yeah, and you're going to talk a little bit about payments specifically. So I'll take it more from like the customer experience perspective, because I feel like that really kind of pulls the lending and the payments. It's what consumers and or small businesses or commercial clients even are experiencing and now, and how that's transforming. You think about what's happening with, we may even call it an invisible experience, whether it is an Uber experience where you are just in and out, you don't have to think about or deal with. So it's that frictionless experience that we all are having, whether we order our coffee ahead and just walk in and pick it up and walk out, whether we're ordering our groceries and either driving through and picking them up or having them delivered to our house. All of those experiences are driving not only the transformation of our customers or our consumers' experience, it's driving how financial services providers address their clients differently. It's how, I'm sure how you guys are looking at, how do I make this a more engaging, a more delightful experience as you move forward. And I think that's what we're seeing happening as we, as FIS and others are engaging with some of these fintech providers, is they're enabling us to engage with consumers, engage with small businesses in ways that we've never seen happen before. They're not walking into an office or a branch. They're not necessarily even calling us on the phone any longer, but we are able to, we'll talk probably a little bit more about artificial intelligence, machine learning, become predictive in understanding their financial lifestyle so that we know when key life events are happening. We can track when that's happening and be able to address their needs even as they're happening, if not before. So I think that's where we're seeing a lot of transformation with fintech.
Well, I'm going to echo off that a little bit. So I think that the fintech space, in particular in payments, they're trying to solve problems for small businesses, for corporates, for consumers. So they look at, like, is there a problem with price? Is there a gap in functionality? So they're going after, to solve a problem. And if you think about payments, so think about a company like Square. So think about a point of sale device sitting on your counter, you're swiping or dipping your cards. Square came into the market and challenged the traditional acquiring space using basically tablet and smartphone technology. So Square, you're able to actually place a dongle into your phone or your iPad and be able to accept credit cards immediately. They have a very simple onboarding process. They have a very simplistic pricing model, which has actually pushed the traditional acquirers to deliver something similar. So they were out there saying, how do we make it easy pricing? How do we make it easy to onboard and make it easy to use? So ease of use, addressing some kind of problem in the market.
So that really any of us could be a merchant, right, Kellie?
Yep, you can be, anyone in this room could be a merchant. You could probably sign up for it and get approved before we left this room.
Right.
It used to be that you'd have some sales guy show up at your small business or your corporation and come in with a big sales deck and some gold chains and offer to pay for your new point of sale device and sign you up in a very complicated contract. And then at the end of the month, you get this extremely complicated invoice bill that you don't understand. So there was distrust created with that. So it's very different. PayPal is a very different type of. PayPal came in for eBay basically to address interchange rates of debit and credit cards for eBay transactions, and they stood up the ACH rails for eBay to make a cheaper solution for payments. A third I can think of, I know near and dear to my heart and some folks in the audience, I've spent years looking at business to business payment companies. Banks were really missing the mark in the mid-market and the small market. The ability for someone buying something to pay their supplier. So there's companies like Avid Exchange in Charlotte that's grown from, I think, 2 employees to 600 plus employees in the last 5 years. They're out there addressing a problem that the banks weren't solving very well. So that's kind of a little bit about payments and
Great.
fintech.
Well, thank you so much. How do you see what you just mentioned affecting competition in a business? Because like you said, small companies can come in and become a disruptors, and banking out there with older systems, that need changing and updating. So how do you see that changing businesses?
I can start. So, as far as so I'm going to take strictly a bank lens on this with the change in business, okay? Because that's what I'm most familiar with. When I think of where the fintech, and I'm going to talk more from the lending and the changing business, when I have looked at the fintechs in the lending space that we've been concerned about disrupting and creating higher competition, there's something they bring to the table. What they bring is they don't have the legacy tech stacks that a lot of the banks deal with. They don't have the legacy mindset, the burden of this is how we've always done it. Let's make that horse faster instead of like making a car, right? So they're not burdened with that history. The flip side of that, and again, I'm going to isolate in the lending spaces, many of the fintechs that are not aligned with the bank and are not providing services to a bank, therefore ensuring a cash flow, have limited depth of capital in a downturn. And on the lending side, downturns result in losses that eat through your retained earnings. You guys know this. We're in CFA conference, right? So, and so on the flip side, so that's the landscape of the fintech that's doing lending without collaboration with the bank. On the flip side, the banks are burdened by these ideas that I mentioned. And so in order to move faster, achieve lower friction, I believe that versus creating higher competition, we're going to end up with a symbiotic. That's the way we're going to end this game on the lending side, is that while there's a proliferation right now, in the end, through another cycle, the winners are going to be the fintechs that have in some way partnered with the large institutions that have a depth of capital to sustain them through a downturn, and will both come out the other side with the ability to provide better services to clients and be sustainable for the long run with this lower friction environment. So that's kind of my view, not from a business banking side, but from a client perspective on the competitive landscape.
Well, and I would just completely agree with that, and that's exactly what we're seeing happening. I would say probably 5 or 6 years ago, we were watching and monitoring a number of different fintechs that were out there, either trying to go direct to consumer or direct to small business offering services. That requires a tremendous amount of working capital to be effective. I mean, the marketing alone, not to mention the ability to scale, is just overwhelming. And so you would see a lot of great ideas come and go just simply because they were not scalable. And so what's happening is the fintechs, whether it be in the lending space, in the payment space, in the digital banking space, anything of that nature, the smart ones are recognizing that they need distribution. That is probably one of their biggest hurdles, is figuring out, how do I reach critical mass with my solution? It could be a fantastic solution, but until you can really drive market growth, you're not going to be successful, of course. So that has been a real thing. The other thing that they're realizing is, and I'll just pick on payments for a moment, it's hard. It is not an easy business to wrap your head around and to understand the intricacies of all of our different payment instruments, all of the different options out there, not to mention the regulatory environment that we work in. So I would say distribution, complexity, and the regulatory environment are 3 things that are really driving fintechs to collaborate with some of the legacy players, to collaborate with financial institutions, with some of the larger merchants. That's what we're seeing happening. I'll take just a moment. We, at FIS, we have an accelerator that we run every year. We have a new cohort every year that comes through, and we help them understand what it takes to really go to market. We have innovation labs around the country that we can bring in and do proof of concepts with, simply because in order to achieve scale, you don't just pop a new platform in. You know, you have to test it, you have to prove it, you have to vet it, and it has to be safe and sound in order to roll it out to our client base. So that's what I'm seeing in terms of competition. It's changing. It's definitely changing. You've got some that are still going to be able to be successful on their own. Totally believe that that's true. But I think the majority are starting to move. I mean, take, for example, what is reported to be Amazon and Chase coming together. Amazon is not getting a bank charter. They're not going to become a bank, at least right now. They're choosing to partner with Chase or Cap One or someone like that in order to offer the type of services that they need, reduce their costs, be able to reach clients that they haven't reached before. So that's a perfect example.
Yeah, I agree with both of you. I just added a lens to that. I've spent a lot of time in my career educating startups in this space about the banking environment and payments, and I had a really interesting experience about a month ago. A person I know in the VC space, he said, Kelly, I'd like to invite you to a cryptocurrency meetup here in the Boston area that we're having on Friday night. He said, I think you'll get a lot out of it, and we could really use someone like you that has experience, you know, in the payments and the financial industry space. So they were kind of reaching out to me to say, you know, help us understand, you know, why people view cryptocurrency negatively from a banking perspective, and what kinds of things do we need to think about from a regulatory perspective when we talk about cryptocurrency. So it was really interesting that they reached out. I did go to this event, which I thought was a really interesting group of people, about 55 folks. Unfortunately, only about 9 were women, 4 were spouses of people that were there. So it was an interesting group, but there were several people there that had lost over $1 million equivalency of cryptocurrency that they will never get back. Now, they didn't pay $1 million for it, but there is this still dark web space that people are thinking about with bad actors in cryptocurrency, but we can also see really good applications of cryptocurrency. And the folks that are not bad actors, they are actually saying, we don't mind. We would actually invite regulatory pressures into this space because we're doing legitimate business. So again, it's a partnership with banks and fintech providers to make sure that your money is safe and sound and secure.
You guys mentioned regulatory issues. So what is the regulatory environment like for fintech companies and for banks who work with fintech?
I mean, I think that's why we are a good marriage, right? So we understand the regulatory requirements coming from all the different payment channels. So we know NACHA guidelines. You know, we know how to work with Fed. We know how to work with the clearinghouse. Most of those words are not on the radar of a startup, small business company. And so we're educating them on why those things matter. So again, it's that good marriage of us sharing with them how to be safe, sound, secure, which a lot of these fintechs partner with banks for that very reason, because we make sure that their payments are safe and secure.
And so can I just, it's always hard for me because I'm not sure how much the audience is familiar with the regulatory environment of banks. And so I'll take 1 second to remind everyone, we kind of have three groups of regulators. We have the regulators that all corporations have, which are the ones that protect our shareholders. We have the regulators that protect our depositors, i.e. the safety and soundness of the bank itself. And then we have the regulators that protect the clients of the bank in all capacities, not just depository. So there's sort of three groups. There are many more, but they're multiple in each of those spaces. But that's the way you think about it. If you take a step back, their interests, while sometimes hard to achieve, are actually so very much aligned with the financial institutions themselves. And because of the complexity and often sometimes even competing rules against these three different regulatory bodies, the landscape's pretty challenging to navigate. I would say one of the things that we've learned as we've done some work in partnering with small fintechs that are actually providing point of sale lending capacity, which means that you have there's a whole myriad of fintech capability in the lending space where you're funding a contractor. So the contractor is doing work in someone's home, or the dentist is working on someone's teeth, and we're providing actual funding at the point where that activity goes on as an alternative to the client using a credit card or cash. And so they can do an installment loan with a little bit better interest rate for the client. The issue from a regulatory perspective, this is just a real specific example, is that agent out there who's using this great technology on a referral basis, they're an agent on behalf of the bank. And so ultimately, even though they're not employed by the bank, they're being referred through the fintech, they're just using the fintech's capability on their laptop, or more likely their phone or their iPad. The requirement to make sure they're treating the client as if they were walking to the branch of the bank, that's almost the same requirement. And so that gives you, when you talk about complexity and oversight in the regulatory landscape, that's a really clear, concrete example of the outreach that has to go on from a bank that's partnered with a fintech that's using a referral service.
I would just add just a couple of comments to that. Because in the past, and kind of where I see this headed, in the past there was a lot of conversation by regulated entities like financial institutions, your industry as well, that a lot of these fintechs are unregulated, and they can just go out and they can win business and they can take business. They're going to disrupt it. And I think that example is a perfect one in what I was saying earlier. As they start partnering with regulated entities, they come under the same scrutiny. Because anytime FIS partners with a fintech, anytime SunTrust or Santander partners with a fintech, it brings them into the fold. And so they're starting to understand the implications of what it means to be in the financial technology space. And I would also say that even separate and apart from that, for some of the fintechs that may be going it alone or may not be in partnership with a regulated entity, the regulators are starting to pay a lot more attention to that. They are gradually pulling them into their review process. because they're starting to show up in their reviews. As a matter of fact, I think even this week, Lending Club received a fine for inappropriate marketing of their terms and conditions. So those type of things I think we'll continue to see. I think they're going to come under much more scrutiny than they have in the past.
And when you say, before we leave this, because I want to, the regulators are learning along with us.
Exactly.
They are engaging, they are very open to how to evolve and move forward. So I want to make sure we leave it with kind of a positive spin on that front.
We'll be nice to the regulators.
I'm just, maybe now would be the time to say that I speak on behalf of myself versus SunTrust, but, we probably should have all made that disclaimer. But they are, I have been very pleased with the engagement that we've had from our primary regulators on wanting to understand, wanting to offer support, wanting to learn in this space.
The only thing I would add to that, Ellen, is I think the startups not an FIS, which is a really well-established fintech, they're starting to respect banks. So these are some guys might be building an app in their garage, and they're like, what's a banker?
Why do I need a bank?
Why do I need a bank? And so I think they're kind of understanding once they see the complexities of how banks operate. So I think there's been a sort of a little bit more of a mutual love fest of, hey, please tell us what we're not doing well and how we could do that better.
Great, thank you. So earlier, one of you guys mentioned artificial intelligence and machine learning. So Esther, let's start with you. What do you think is the role that this is all playing in the fintech industry?
We are just on the tip of that little iceberg, or that big iceberg. I think it's going to become pervasive throughout our industry, throughout every industry. We're doing so many, we've applied artificial intelligence in so many areas within FIS, whether it be for fraud protection, I think is probably the most urgent use case that we use. We use it also in our some of our derivatives area. SunGuard is now part of our company, so we have a large institutional wealth and asset management portfolio of solutions. But there's a number of different areas where we are using it today, and we're running even more proof of concepts. Whether we're working with IBM and Watson, or whether we're working with Microsoft, or we're working with SAS, with FICO. All of the providers that we work with are in some various stage of maturing that. Even getting into the predictive analytics, marrying that with robotics, marrying that with conversational, what we call conversational commerce, the natural language processing, the Alexas, the Siris, I truly do believe that is now even transforming the way that we do banking, the way we handle our finances. I listened to the gentleman earlier, and I totally agree that you have to be, I see this as absolutely inevitable that we take advantage of this, but I do not see it as replacing the ultimate engagement with the customer. I think that these can be used to reach out and engage, but ultimately that human touch, that emotional intelligence, regardless of what movies you may have seen about it, I think that there's still going to be a tremendous need to have that interpersonal engagement separate and apart from the artificial intelligence aspect. But the compute capacity, I get really excited.
I get excited too.
The
excited about it.
The compute capacity that is available to us today compared to even 5 years ago to enable us to, in real time, do the algorithmic predictive modeling is unbelievable. So of course we must tap this, but we must tap it in a very intentional and very controlled environment.
So
I'm going to add.
I was going to say, I feel like that I have been to so many different meetings lately, and I feel like we're using AI the way we did big data like 2 years ago.
Right.
And so back then, I tried to connect for folks and basically said big data is just augmented data. It's taking information you already have and adding a little more to it to make the predictive capabilities that much stronger. So that was big data. So when I hear people talking about AI, I think a lot of times I've had conversations with my team, and I think my peers at work, and it's hard for people to actually translate the conversation into something tangible. And so I was just going to take a moment because I have an example that was just brought to me with something that we're testing, and I'm not going to go into it because it's a fintech and I'm not supposed to talk too much about it because, you know, maybe I'm under NDA or whatever. But the very last thing you said about the learning and the human touch, so here's a way to think about what this means. If you have a person who sits in a contact center and every day they receive lots of calls, and they have a very tight window in which they're supposed to respond, yet the answers they need to respond with could be over a massive range of information. By virtue of starting with monitoring the calls, both the incoming and the responses given by the individual, in a voice recognized system, continuing to analyze what good and bad looks like, that's the machine learning concept, repeating a process and having the analytics be able to get to a point where it tells you what looks like a good call versus a bad call, then refining across all these different groups of information to create an algorithm, which is where the artificial intelligence comes in, so that when the person speaks to the contact center, it automatically pops up the answer and the words that the contact center engagement model should use back, and compresses the time frame for answering the question, and creates a much better experience for the client because it's faster and they know the answer because it's right there in front of them. That's a real concrete way of the way we're going to go from how we operate today through machine learning to AI. And that's just to make people really get what we're talking about. Is that sort of along the lines of what we're talking about?
Absolutely,
Okay.
and the same thing applies in a fraud situation where you are able to gather multiple points of information about what is a good transaction versus what is a bad transaction, and have those pulling multiple data sources together and being able to become even predictive about, I see a trend happening. And being able to create fraud models that are actually stopping fraud instead of reporting fraud.
I'm just going to paint a little bit of a picture of the possibilities of artificial intelligence. So think about it two ways. If you have a voice recognition system like Alexa, Amazon, or iHome, Google, they interact with consumers differently. So imagine walking into your house and your Alexa may say, "Hello, Kelly," and you're like, "Hello, how are you today?" And they're like, "Oh, the weather's nice today." And if it says, if I ask Alexa, "What is the name of my dog?" Alexa would not have an answer for that. It would say, I don't know the name of your dog.
The first time.
Well, actually, so what Google does and iHome do, if I ask what is the name of my dog, Google system would say, "I don't know, what is the name of your dog?"
And then remember.
And I tell them my dog's name is Bob. And so the next time I might say, "Hey, I was talking to Bob today." So when you think about artificial intelligence and machine learning, it's learning about you and learning your behaviors and patterns. When I think about the future of an accounting department or a finance department, I see someone coming into work and their voice recognition system says, "Good morning, Kelly," and I say, "Good morning." So they've already authenticated me one time. Now I may be sitting in front of my computer and I have a facial recognition system or an iris scanning technology. It's authenticating that this is in fact Kelly Goodwin. Her phone is here with her geolocation. I voice recognized her and I facially recognized her. So when I go to do now big banking transactions, I had 3-factor authentication with using no username and no password. And I can also see with artificial intelligence, your voice recognition system could say, your top 3 priorities this morning are that you need to approve a $10 million wire and you need to read 2 emails of high priority from very senior people in the company versus coming in, getting your coffee, and reading 100 emails. So it's going to make you a more efficient employee.
But it will have figured that out by watching you and monitoring you over a period
it
of
will
time and
be-
understanding it's this whole process of having to understand good and bad and the choices that are made over
It just
time.
gets smarter. It just gets smarter.
This is very exciting stuff. Let's see if our audience has any questions.
When I think about the future of finance, I think it's about us making more effective and efficient decisions about our existing clientele. But I was recently at the Fed talking about financial literacy, and they're worried about the 40 or 50% of the population who's unbanked. And it seems to me that I know that business is going to focus on what's most profitable and what's going to help shareholders, but we have this opportunity here where we can take the population and help them to get to a different place in terms. Do you see or have you experienced much in terms of Fintech, how it will affect and improve the lives of those that aren't on the bank balance sheet as a large amount, are potentially, if we do it right here, we can then take those ideas and implement them across other parts of the world where their percentage of line might be higher.
I will share what I'm seeing and have seen, and I'll just use the word gamification. Because what I'm seeing, especially even with children, bringing children up and educating them, but let's just talk about the unbanked. If you can engage people in a way that they can, in a simple way that they can understand what it means to balance their spending, and ultimately lead them into investing and borrowing, just balancing that. There are some great tools that are coming available that I know a number of financial institutions are looking at launching to start engaging and helping that segment of the population. That I see are being very impactful and starting to attract and engage people, because this is where we believe that digitally, that is where that can happen much more effectively and intelligently behind the scenes.
So I feel like that was a layup, and I'm going to say, so SunTrust actually kicked off a movement in early 2016. I don't know if you work with SunTrust and you knew about it too. It's called On Up, and the whole focus is to educate folks across several different pillars about how to balance their needs versus their wants and their future. And I think that there is not only a website, but we have gamified it, put it out there. There's been tremendous, I think we've had almost 3 million plus folks sign up for this. I think though what you raise is, and what we are thinking through, is how do we leverage all the capabilities that we've talked about to take it to the next step as far as then getting to points of advice versus teaching. So the teaching is the first part, but then actually helping folks take action in the process is something that is on our minds. Kellie, did you have anything that I could see thinking?
I mean, just one thing, there's a little company called Acorn. That was a fintech that emerged, and having the ability on your phone, if you pay for something, it'll say, oh, you have 2 cents left out of a whole dollar. Why don't you just put that in your savings account? So that was an example of a fintech that had a really great idea, and now banks are incorporating that solution into their online digital channels.
I mean, you could even see, like, walking into, you walk into Starbucks and you get a little notice that says, hey, if you buy that $3.50 $1 of coffee, that means you aren't going to be able to achieve your savings goal this week. So
I think there's a lot of focus.
Yeah.
Is the takeaway there.
Let's take one more question. Please.
So Kellie has talked a lot about the intersection of fintech and banking and how you work with fintechs. From the fintech side of the house, I think they recognize the need to work with banks, but also recognize how incredibly difficult it can be to work with banks. And there are banks out there that maybe don't have the same brand and reputational risk that SunTrust or Santander have. So how do you guys come from these well-respected
I'd like to take a stab at that. I know that Ellen's definitely
for
going to
it.
have a perspective on this, and I know because I worked with the risk team when I was at SunTrust trying to innovate the payment space. But I think it is from a product innovation person, a product strategist. I view partnerships with fintechs as a great way to get something into market that's very innovative, using human-centered design principles. I know my tactic is to make sure I'm vetting the fintechs I'm looking at really well before I take them, to risk and legal and compliance. I'm not going to take a bad fintech actor into that group. But what I have done historically in many companies is go educate the risk teams and the legal teams and the compliance teams on what your strategy is, what you're trying to do, what pain point you're trying to solve for, what type of revenue streams you're looking at. Go educate on what you're trying to accomplish, and then go educate them on who these fintech providers are in that particular space. So when you do bring two vendors forward to do something innovative with, they feel like they've been a part of the journey, not us as a product strategist just throwing, hey, there's this company called whatever, and I'm just going to throw it over the fence and expect these very talented teams that save our reputation every day, and say they don't even know what you're talking about. So that's how I view working with a well-established brand and mirroring and marrying up a fintech.
So I will say, very well said. I agree with everything you just said.
Do what Ellen
I
says.
think, so there's a reality, and the regulators put in place something called Dodd-Frank a couple of years ago, and as part of that, there are very prescriptive rules for certain size institutions when they engage with third parties. The third parties across the board, whether they're doing processing, servicing, or fintech. Now, I would say that the bar is higher if you are engaging with a financial technology firm that is what I talked about before, going to be an agent on your behalf, so there's an even higher bar. So as part of what we've done in the last year, 2 years, I actually have a group that is solely dedicated to researching and evaluating and entering into partnerships. And Kellie laid the groundwork a couple years ago at SunTrust, so we've mimicked it, and what we've done is we've actually we have created dedicated risk stewards that come along the journey with us, so that so that their input is understood. We also have created basically frameworks to assess different types of partnerships, so that we know we're not missing anything as we go through it, and we can be pretty quick about it. It also allows us to educate the fintech up front, because it is a burden for the fintech. It is a lot to go through, and so they come in eyes wide open about the time to market, about the time for vetting, about what they'll have to be willing, how the collaboration will go. And so that would be what I would add.
Unfortunately, we're out of time, but ladies, thank you so much. Your expertise.